Of HR.com, welcome to the webcast, Streamlining ACA Compliance, Insights and Stories from HR Leaders, sponsored by Trizaic. This webcast has been pre-approved for 1 HRCI business credit and 1 SHRM credit, so please be sure to attend the complete webcast in order to receive your credits. For those of you in attendance with us here in the Zoom webinar today, the credits will appear in your HR.com account within 2 business days, and you will receive an email from HR.com with your credit information. So during the webcast, if you have questions for the presenters, we ask that you use the Q&A in your webinar controls. And for those of you viewing this via live stream from any of our social channels, we welcome you as well, and we invite you to view the archive of this webcast on HR.com if you're looking to acquire the HRCI and SHRM credits as well. All right, it is now my absolute pleasure to introduce you all to David Creelman, who will be today's moderator for the webcast. David is a renowned HR expert and CEO of Creelman Research, a company dedicated to conducting in-depth research on various HR-related topics. He is widely recognized for his extensive knowledge and expertise in the field of human resources and has co-authored several books, including Lead the Work and The CMO of People. The stage is now yours, David.
All right. Well, thank you, Rhonda. And I'm really just the moderator here. We have some experts to help us go over some really important topics today. And certainly this whole issue of ACA compliance is one that bedevils many organizations. So our first expert is Joanna Kim, who's the EVP of Regulatory Affairs, as well as being Chief Legal Officer at Trizaic. And she's a former partner with Aiken Gump, and she's got 20 years experience advising clients on employment tax, intellectual property, and other business issues. And if you go back, she has a BSc in chemical engineering, so you can tell quite an accomplished expert. Our other expert is John Leathers, who's EVP of Product and Revenue, and he's responsible for Trizaic's product development as well as the professional services team. And he's got a lot of experience with HR tech, professional services. Not surprisingly, he's got a very strong focus on regulatory compliance and analytics. I think he's particularly helpful to have on this call because he helped design and develop the Trizaic ACA compliance management solution. And so he really is, in fact, both our speakers are ACA experts. So I think we're really actually very lucky to have 2 of the top people in the world to talk to you about this today. But I think what we're going to start with is I'm going to share a little bit of the research that we did in conjunction with HR.com. We also did some focus groups. We'll talk about why compliance is challenging, who gets the penalties. But then I really want to spend as much time as possible talking to Joanna and John about some of the issues. And of course, we'll have time for Q&A at the end. And there is a Q&A box where you can submit questions as we go. So let's look at the focus group insights first. We held 3 focus groups, and here are some of the things we learned. In terms of the themes, we kept hearing there's no clear way to get answers. People said there's no one to call. You try to call the government or you call somebody else, and so you're always a little bit in the dark. And it's not just that there's an enormous amount of administrative work, but there's also an enormous amount of double checking because people are very concerned that they don't want to make an error, so they're always checking and double checking. The timelines can be very short, partly because sometimes you don't get the data you need to fill out your ACA compliance until shortly before your own deadline. And you start adding up these first 3 points, and we heard time and again from the focus group that ACA compliance can feel overwhelming. I'm sure some of you who are on this webinar feel the same way, and that's why you're here. And all the while, there's this constant fear of penalties. And some quotes that really sort of captured my imagination when we were listening to these HR professionals who are trying to handle it is they say, the first one has to do with the relationship you have with managers and employees. And so, certain roles are not supposed to work more than 30 hours, but sometimes they do anyway. And managers need to be aware of whether they need coverage. Another one said, I've had to create a parallel system that allows me to double check the totals. And that just blows my mind that somebody's actually creating this parallel system just because they don't trust their existing system. So they're basically doubling the work. Someone else said, I have to go through hundreds of pages to see who is and isn't eligible. So you just imagine this huge stack of paper on your desk, carefully going through document after document after document. And again, I don't know how many of our listeners have faced that issue. It's hard. There's a lot to keep in mind. I've had to read and reread things to understand them. And that's another important characteristic of this topic. It's not just a matter, well, I'll just read it and do it, because a lot of the time there's interpretation. It's not that clear what you need to do. And so that puts a lot of pressure on you. And if you're out there struggling sometimes and you're reading this, it's not you, it's the regulations and the complexity around them. And you don't know if there's a penalty from the past years. It's just waiting around the corner, because it takes the IRS a number of years to work this out. So something happened some years in the past could still be coming back to bite you. Now, we can move on and we can look at some of the data as to why compliance is challenging. So this is from a survey of 244 professionals with ACA experience. So the first question we really want to know, well, is compliance burdensome? How do you feel? And you'll see that about half said that it's somewhat burdensome, and a further 20% said it's overly burdensome. So, you know, that's getting up to around 3/4 who are feeling it is a burden. You may wonder about, well, what about that 27% who say it's not burdensome? And we'll get into this when we talk to our experts, but it all depends on the nature of your business. And there are some businesses where it actually is not burdensome, where it is easy. And I expect that if it were easy, the listeners wouldn't be on this webinar. So if you're finding it burdensome, you're in good company. That seems to be the general consensus. Now, what makes it burdensome? What are the challenges? The single most common challenge had to do with employee misclassification, right? So that was the one that more than half the people said, yeah, we struggle with this one. The next two most common ones were determining affordability. And this is something that we've seen in the questions too, in terms of the additional state ACA reporting requirements. So those were the top three. But if you just kind of look down the list of names, everything from improper 1095C coding down to the rule of parity to dirty data and so on, there are a lot of different challenges. So it's not that you can just fix one thing, like you'll figure out the 1095C codes or something, and then you'll be fine. There are all kinds of things that get in the way of doing this well. And I think that was my main takeaway, both from the data and from the focus groups, is a variety of different kinds of challenges. Now, if we go on to the next, we'll be say, well, how are organizations approaching it? And there are actually a number of different things you can do. So a lot of people have it included with payroll. Some people are using it ACA compliant, an in-house ACA compliance team. And by the way, these are not mutually exclusive, right? You can have an in-house team and also include it with payroll. But a third of the people are outsourcing to ACA compliance vendors. So these are experts who specialize in ACA. A quarter are outsourcing to an insurance broker, a few to accountants. So you do have a number of options to choose from. And so the question becomes trying to figure out which of these options is going to be best for you. Now, what's actually helped people when we say, well, what's actually been most useful for you? And 60%, the most common answer was developing a dedicated internal team. You have to have people who have time and knowledge and expertise to focus on this, because if we go back to the previous slides, it's burdensome. There are many different challenges. So you can see why you would want expertise to do it. The second most common thing that's helped is using the ACA compliance experts. And what we see in these two most common solutions of things that people are saying, this is going to help you, is that you need the expertise. There are lots of administrative challenges, but none of this is going to work if you don't have people who have time and knowledge to do it the right way. So that would be my takeaway from this slide. Now, the thing everybody worries about are the penalties. And again, when we get into our expert discussion, we'll let them tell you a bit more about the penalties. But here's something that's actually quite interesting. So let's call up this next slide about, despite the difficulties, our organization confidence about compliance. And if you see the dark blue and the regular blue, that's very confident and confident. So we're looking at basically 80% of the people saying, despite the difficulty, we know it's hard, timeframes are short, it's confusing, all these things, but we are 80% of the people say we are confident or very confident that we're 100% compliant. So that's sounding pretty good, right? People are confident they did it right. But then we move on to the next question, which had to do, well, is that confidence justified? And the answer is no, it really isn't, because 1 in 4 of the respondents to the survey, and I was quite surprised the number was this high, but 1 in 4 told us they'd been audited by the IRS for potential ACA non-compliance. And and of these, basically 80% of these roughly were they were going in, they were saying, yeah, we're very confident. And they're shocked when they get the letter, because they'd worked so hard on this. They were so sure they'd done it right. And then they get slapped with a letter and have to explain to their boss why this has happened to the organization. So that's the findings. We also actually looked into some additional insights on who was getting penalties. And it varies a lot by industry. And so some of the 4 industries that got the most penalties letters, the ones that were most at risk, are food and hospitality, construction, education, and health services. So if you're in any of those industries, or industries that are similar to those industries in terms of the kind of workforce you have, then you're particularly at risk. And you need to know this so that when you're communicating with your leaders, you let them know we're in a risky industry. It's particularly challenging for this company. And that's why I'm looking for additional help and resources to get this done, because we know that for some people it's not burdensome, but in our case it is for good reason. And leadership, will you please pay attention to that? So I think the most interesting part of this conversation is actually to get to the experts. So why don't we get John and Joanna on the line here? And they're on the line, but let's bring them up front. So I've got to get my first question here. And John, I think I'll maybe start with you and maybe start at a high level. Can you unpack the differences between the compliance and the reporting issues? Something maybe I didn't make very clear when I was talking about being a burden.
Sure, yeah. Thanks, David. Appreciate the introduction here. So at a broad level, when we as practitioners think about the ACA employer business landscape, we think about 2 big buckets of employers. So there's those that need help with reporting, and then there's those that need help with compliance and reporting. So you have these 2 categories of reporting and compliance, and let's unpack both of those. So we'll start with the compliance piece. As a general matter, there's 2 subcomponents to compliance, and there's the plan level compliance. And when we're talking about plan level compliance, we're talking about things like have health plans been put in place that meet minimum value, that are affordable, that comply with non-discrimination provisions. And as a general matter, the benefits brokers that work with employers do a fantastic job of setting up plans that are compliant with those requirements. And unfortunately, for many employers, that's where the compliance piece stops. They kind of think to themselves, great, I set up a compliant plan, I'm good to go. But really, that's where the process is actually just getting started. There's a whole different element to the compliance piece where on a monthly basis, the organization needs to make sure that they're offering coverage to 95% of their ACA full-time employees. And so that piece is the piece where we see a lot of failures. Now, the compliance, this kind of monthly compliance piece, as you were referencing, David, is particularly relevant for organizations that fall into riskier industries. And so as you called out on the screen a couple slides ago, those riskier industries are employers where their workforce consists of higher proportions of variable hour and or part-time employees. So employees where their schedules are subject to shifts and changes. They may be working at multiple locations. They're coming and going from the organization. And then on the reporting side, we think about two pieces of reporting. There's the annual 1095-C coding, so creating the codes that are actually going to be filed with the IRS, and then the mechanics of just filing those codes with the IRS. So the mechanical piece of the filing is fairly straightforward. There's many vendors that can assist with that piece, but employers run into issues on the reporting side with the code creation because there's a lot of complexity there. So broadly speaking, there's these two categories of compliance requirements, reporting requirements, and depending on who the employer is and the composition of their workforce and how they're structured, they may think about compliance and reporting, or they may be focused on more of just the reporting piece.
Yeah, so I think it's really important that you have this clear in your head if you're working on ACA compliance, are these different elements of it. And you can see why people can be overconfident because they don't understand the full scope of the compliance and they end up getting a penalty. And Joanna, this is one of the things that came up both in the survey and in the focus groups where people are talking about their fear of penalties. So what is it that triggers a penalty and what can people expect?
Hey, really segueing from what John was saying with regard to compliance issues and reporting issues, the reporting issues and penalties associated with that, that's essentially, when the filing is late, incomplete, inaccurate. And it could be inaccurate because there's bad coding, codes are missing, things of that nature. And so those kind of penalties are independent of what I'll just talk in a moment about compliance penalties. Those are penalties for failing to complete your filing accurately and furnishing them to the employees. Now, separately from a compliance standpoint, that's, did you offer coverage to 95%? Was that coverage affordable to the employee? So those are sort of compliance issues. And if you fail to do that, you're subject to a separate independent set of penalties. So, the worst thing is you didn't report properly and you failed to offer coverage, then you're going to be tagged with both penalties. And so, what we certainly see a lot of from a triggering of a penalty with regard to late, incomplete, or inaccurate filings, like there's bad coding. It does not accurately reflect what it was that the employee actually received. There's separate codings depending on the type of affordability in that. Kind of talking about an earlier slide that you had mentioned about sort of what are the biggest issues, employee classification issues, affordability determination issues. Those can translate to bad coding. With regard to the employee classification, from an ACA standpoint, there's sort of two issues. One is, are they an employee, even though you're calling them an independent contractor? That could be an issue. Separately, full-time. That is a very complicated question in the ACA. Most people think of full-time on like 40 hours a week, but in the ACA, it's a 30-hour cutoff and it's an average, and there's different measurement methods to determine that. And so getting that wrong and determining someone's not full-time when in fact they're full-time, that may create, undercounted full-timers, for example. So there are these sort of late, incomplete, inaccurate penalties. Last I checked, there are about $300 a form penalty. And they go up every year. And it doubles down if the coding is bad, both from a filing standpoint and a furnishing standpoint, on the failure of offering coverage because you didn't offer it to the 95% threshold, or it didn't meet affordability, and that itself has a pile of different calculations. So let's say you coded it properly, but at the end of the day, you didn't hit the 95% mark. You're going to get tagged with what a lot of people call as a hammer penalty, which is a penalty where as long as one full-timer didn't get coverage, got a premium tax credit, and you didn't hit that 95% for the workforce. So one guy goes on the exchange, gets premium tax credit for every month of the year, you're going to get tagged with it's a little under $3,000 per full-timer. So even though one guy triggered it, you're now going to be doing that, I don't know, it's like $2,700 or something times the total number of full-timers. So it's a big deal. And then separately, affordability, like even if you offered it to everybody, if it wasn't affordable, and it's a very precise formula, and there's different types of safe harbors, you need to make sure you calculate it right, which gets complicated in some of the industries that we talked about, like, for example, in education, there's a bunch of different types of rules with regard to affordability. Employee flex credits goes one way, cash out, options go another way in determining affordability. So those can get tricky, and not being affordable will result on a penalty per employee who gets an exchange.
Yeah, and so people really need to understand the hammer penalty and make sure that their leadership understands, because that's where the big risk is. And it's also interesting, again, I keep coming back to expertise, but you were talking about how in education it's different than elsewhere. So you have to have expertise in your industry as well. And John's sort of really focusing on industries. Earlier on, we gave that list of industries. What was it about those industries that made them so both risky and difficult?
A great question, David. I think broadly speaking, when we think about what creates difficulties for employers within the context of those two categories of compliance and reporting, we think broadly about data issues, number one. And then secondly, we think about regulatory methodology. So the interpretation and the implementation of the appropriate regulatory methodology. So from a data perspective, on the compliance side, when an organization is looking to ensure that they're appropriately measuring their full-time employees and identifying them so that they can make offers of coverage and meet that 95% pass-fail threshold, there's a ton of data issues, particularly in those higher risk industries. So higher and termination dates are notoriously inaccurate within organizations that have workforce compositions with a high proportion of employees being variable or part-time. Think about it: accommodation, food services, hospitality, construction, et cetera. You have employees coming and going. Again, they may be working at multiple locations. Some organizations are structured where different locations are actually different tax entities. And so it gets complex there to even just to appropriately identify the hire and termination dates. And that's the foundation from a data perspective, right? You need to be able to say, is this employee active for this month, to be able to report accurately to the IRS down the line? And then there's also employee classification issues, just from the perspective of, at the point of hire, do we have a simple data process to classify this employee as either we expect them to work at least 30 hours per week, or if we don't, are they part-time? Are they variable hour? Are they seasonal? So there's those two issues are thorny issues for employers. Secondly, from a regulatory methodology and just the interpretation and implementation of that regulatory methodology, there's a lot of complexity around the measurement methods, right? So the look-back measurement method is very complex. Employers, as a general matter, I think they do an okay job when they're applying the look-back measurement method of correctly running the standard measurements for ongoing employees that have been with the organization for some time. But with respect to the new employees that are getting hired each day, week, month, that's where we see a lot of process failures, where they're not correctly applying initial measurement periods for those employees. And then it gets complex because over time, those two start to overlap, and there's reconciling logic that needs to be applied between standard and initial measurements. There's also affordability calculation issues. Leave of absence needs to be treated, especially for certain kinds of leave of absence. There's things like the rule of parity, where for employees that have been gone for less than 13 weeks, they're generally treated as not being rehired. They're treated as continuing employees upon returning to the organization. So that creates complexities where we see a lot of organizations stumble. And then just from a simple process perspective, having the right business internal controls in place to make sure that the right people are looking at the right analytics each month to make sure that just that simple action of actually saying who needs to be made offers, making those offers and ensuring they're documented in some way, that's happening. And think about it, David, when organizations experience turnover, things fall through the cracks, right? And so you may have had a really great process in place, but then someone leaves, someone comes into the company, and they're trying to kind of pick up the pieces. So that's the compliance side. From a reporting side, just the process at the end of the year of merging benefits and payroll data, inconsistencies that often manifest between those data silos. And then just from a coding perspective, we have to remember there's 36 line items per employee. There's dozens of potential code combinations for organizations that are self-funded. There's self-funded enrollment to deal with that needs to be reported on to the IRS around dependents and family members. And then there's COBRA reporting, which is often kind of forgotten, where the COBRA eligibility and the reporting and the enrollment needs to be reported on. And that may be in an entirely different format or system. So there's a lot of different issues across both of those categories of compliance and reporting, but we tend to bucket those and think about them as generally being data issues or regulatory methodology, interpretation, and implementation issues.
Yeah, so I'm a listener here as well, and with our other listeners, I hope you're kind of taking note of these are the kinds of places where things are particularly difficult, where they can go wrong, and where extra effort is going to be needed to both learn the correct way of tackling them for your particular business. And you'll also need to think, okay, well, now that I've learned what needs to be done, making sure I have the processes in place that they actually do get executed the right way. Joanna, I know it all depends on the kind of workforce you have, and what's the difference between what is it about the people who say it's not burdensome at all versus the people who say it's highly burdensome?
Well, I suspect that the not burdensome are sort of benefits rich. Everyone's eligible, that kind of scenario. Everyone's sort of a salaried or just sort of very predictable wage, and the processes are better. Those are kind of the companies. Like if you have that, absolutely great to hear that. But the problem we're having in these sort of industries that John was talking about is, costs are something they're trying to keep down. Like you might be thinking from what John was saying, why not just offer it to everyone? Just because super complicated. Yeah, you can do that. But, the cost of healthcare coverage is the second biggest expense with respect to an employee. First, it's wages, then it's healthcare costs. And so while, I think every employer would like to offer healthcare coverage to every employee that walks in the door, they're running a business. And so you have to take all of these things into consideration. Now, the look back method, as complicated as it is, it has one very, very important benefit. If you are properly applying the look back method, you could potentially have over a year of what's called a limited non-assessment period, i.e. a period where you're not expected to offer coverage. And when you're in a high attrition, variable hour situation, people whose hours change constantly, they're part-time. I'm not talking about the full-timers, just these people that kind of come and go, you don't potentially have to offer any coverage to these folks for over 13 months. And, and it could be that, they're only there. I mean, you're talking about people who come in for like a few weeks and they leave, a few months and they leave. When you're dealing with those kind of industries, it makes a lot of sense to try to kind of streamline where your costs are going to, where you're going to spend your money. And so if you apply the look back method properly, you can have this limited non-assessment period of over 12 months. So if you do that, you could have people coming and going without having to trigger all the benefits type administration and costs associated with it. So that is the benefit of using the look back method. But the flaw is it's complicated. And if you don't do it right, the period of this limited non-assessment period is now subject to potential penalty because you didn't offer coverage and you didn't apply the look back method properly. So, in terms of characteristics of the workforce that makes compliance so hard, absolutely echoing what John was saying, high attrition rate, variable hour employees, they're like working in multiple locations. Maybe they don't have regular access to email. Perhaps they are, and basically lower paid employees. Like if you have a situation where everyone's 40 hours a week, they're all, salaried, and you offer coverage to everyone, sure, compliance can be easy. And my guess is that 20% that in that confident category, or not burdensome, that might be your archetype of the kind of business you have. But if you aren't fortunate to be in that kind of scenario, which a lot of businesses happen to fall under, particularly in the industries that John was describing, that's really not an option, and it is a significant cost. So it's a cost benefit analysis. Unfortunately, the cost, healthcare coverage, benefit, you don't have to deal with ACA compliance as much if you are okay with the cost. But if you want to try to keep those costs down, things like the look back method may be something that you want in your wheelhouse, but the burden is substantial burden trying to administer.
And the conversation we've had so far, I think, has given people a pretty good idea of many of the elements involved and some of the challenges and some of the things you need to get right.
Mm-hmm.
And I think what people are also very interested in, okay, give me some advice on what I can do. And maybe, John, you can say, if let's imagine somebody asks you, you're at the airport and somebody pulls you aside, they say, I know you're the ACA compliance guy. What do I need to do to have a process that is bulletproof?
Great question, David. So, and just to zoom out a couple clicks, why is this important? Why it matters? I think everyone understands that there are penalties, of course, for failing to comply with the compliance and the reporting requirements. And those penalties, are described by Joanna. But what many may not realize is that Affordable Care Act non-compliance represents the largest potential source of financial liability for HR departments in across the U.S. business landscape. So that's the context within which they're operating. And so, it is critical that organizations, solve this and come up with great approaches, to be able to solve around the ACA. I think that, there's really three simple levers that we think about when trying to construct a great approach to the ACA, and that I would offer to that hypothetical individual in the airport. So think about people, process, and technology. So those three levers. So from a people perspective, from a personnel perspective, just make sure that, the organization has set aside the time to make sure that the individual or individuals that are going to be responsible for effectuating ACA compliance within the organization do have had the opportunity to become fairly well versed in the IRS regulations, that regulatory knowledge. That's really critical. A lot of times people are kind of unfairly thrown into situations where there's high expectations placed on them. And, from a skills, training, and knowledge perspective, they haven't been enabled or empowered to be able to be set up for success to manage this. From a process perspective, I would just say making sure that the right internal controls are in place to ensure that there is a mechanism to say, hey, are we looking, at the right analytics each month over month? Are we treating this with the seriousness that it deserves? Are we confident that we're correctly identifying those full-time employees, that we're making offers, that they're being documented in some way, shape, or form, whether that's in the benefits administration technology platform if one is in use, or, in some other way if one is not. And then lastly, from a tool and technology perspective, just one of the unfortunate realities, I think one of the slides you showed, David, kind of illustrated the manner in which various organizations throughout the business landscape are currently solving around the ACA. One of the unfortunate realities is that many systems don't have in place the ability to measure the actual penalty financial liability obligations in real time, month over month. And so where that's the case, I would always advise someone who's responsible for managing the ACA to solve for that gap in the technology. It can be done. The organization can create kind of internal spreadsheets or measurements, but that's really critical, because if the leadership doesn't have that visibility, the HR and the finance leadership doesn't have that visibility of understanding what is that penalty liability exposure, the organization could get hit with a very nasty surprise 2 years, 3 years down the line when the IRS comes knocking and asks questions. And all that could have been resolved had the tool and technology, that the organization is using just been able to provide that visibility to the organization and to the practitioner that's responsible for managing the ACA internally.
Yeah, and you put on your leader hat and you think, what are the leaders really concerned about? And they will be concerned, what is that liability number? So that's really good to have in terms of communicating with your leaders, because that's something they really care about. And it's interesting you mentioned software, because that is something that came up in the survey as well, that people often felt the software wasn't up to the task. Now, go ahead.
Oh, sorry. I would just add, if you want bulletproof compliance, absolutely, certainly, reiterate John's point, you need someone in charge who knows what they're doing. But, as part of that, like I recall in an earlier slide, sort of the various different ways organizations are approaching compliance. And I think 51% was using payroll. And then you had also insurance broker outsourcing and outsourcing to accountants, as well as ACA compliance vendors. And I think key in that is find out what they're doing for you. Because, like as John was saying, brokers tend to be really good at coming up with ACA compliant plans. But that doesn't mean they're administering it for you, tracking eligibility, who gets offers, et cetera. Typically, they don't. So, if you want bulletproof compliance and you're using, say, a payroll vendor, an ACA compliance vendor, whoever, find out what's the scope of what they're providing for you. With regard to payroll providers, a lot of times they got really good payroll data. But in terms of who was offered coverage, not so much. They're very siloed sort of data sources. So are they culling that for you, and are they doing it accurately? Or are they expecting you to take care of that and feed them the information? So that's a really important piece of, if you're the person in charge and you're using a third party to handle it for you, make sure they're covering what you think they should be covering.
Yeah, I think that's really important, because I know my instinct would be, I just want someone to handle this.
Right.
And I think, and maybe I think I do have someone to handle it, but I don't, because I didn't check off all the boxes in terms of what they were or not doing. So
sure, we've had lots of clients that came to us and were like, oh, we thought our broker was handling it, and they got a penalty letter, and the broker's like, no, I told you I was going to give you an ACA compliant plan. And then there's a little bit of discussion, I'll just say, in terms of where the breakdown happened. But at the end of the day, if you're the HR person, you're responsible for it. You're also responsible for the third parties that you bring in to help you.
And Joanna, you mentioned brokers. I did do a little piece of research as part of this whole project, just getting some insight from 8 brokers. And one of the things that they highlighted was a concern about the changing regulations. Mm-hmm. So tell me, what are we up against in the future of ACA compliance?
Well, I can tell you that the change it's going to be harder, not easier. The IRS has gotten more stringent with regard to penalties. Now, the ACA came around in terms of employer reporting. The first actual filing timeframe was 2016, and there was like piles of transition relief and good faith, transition relief in terms of inaccuracies in reporting. Well, that good faith is gone, and now the IRS has basically had 7 years since its implementation, kind of to get their sea legs, and they're getting more efficient. They're cranking out these penalty letters. They automated the AIR system, which sort of takes all the codes in the forms that you submitted and spits out penalty letters. So, they have been tinkering with the coding. So it's not static. The coding has changed quite a bit from when it started. Each year there's a little tinkering with it. But at the end of the day, for the IRS, there's going to be more stringency and penalties, less of, oops, I forgot to do this, or, you're gonna have to have the IRS sort of normal course, which is you had a reasonable basis for the error. And that's much harder standard than good faith transition, where you made a good effort, but you made a mistake. Now, instead of sort of, good faith, it's more like establishing reasonable cause. So it's a tougher standard. So that is, a change that's happening. Is it's going to be harder to justify failing in terms of reporting. Of course, the penalties in terms of the offer, remember, we're talking about compliance and reporting. The compliance penalties are there regardless of, whether or not the IRS in the past have been more lenient in terms of filing penalties. Now, some changes that happened more recently, Biden had signed the American Rescue Plan Act. That added some elements with regard to reducing the cap for affordability, increasing the FPL safe harbor over 400%, basically making it not a cap. And without getting into the weeds of it, at the end of the day, what it means is more individuals are eligible for premium tax credits. What does that mean for you as an employer? There are more people that can trigger penalties against you. That's what it means. So, a couple of years ago, the American Rescue Plan Act reduced it from 9.5% to 8.5%, making it like it cannot cost the employee more than 8.5%. It used to be 9.5. There's some adjustments each year, but baseline, right? And if you made more than 400% of the federal poverty level, you weren't eligible. Now that cap is gone. So that was in place temporarily for 2 years, but then last August, they added another 3 years. So that's in till at least 2025 and, perhaps continue.
And what's happening with the states, different states?
Oh, so, the ACA, good point. I forgot to mention that. So the ACA, when the individual mandate got zeroed out in the last White House administration, a lot of people thought that was it. But, a lot of times what happens is when the feds have a law and they null it out, the states come in and fill the void. And so you have states like California, New Jersey, you also have DC. I'm kind of drawing a blank off them, Rhode Island, Vermont. They came up with their own individual mandate. And so in order to sort of administer that, these states have also come up with their own reporting. And what's troubling about it is it's not like you could just take the 1095 forms and just, submit it. Like New Jersey has a rule where if you have less than a certain number of forms, they have to be these New Jersey forms. So that's adding another complexity and is, sort of echoing what you were talking about earlier in terms of why is it challenging? One of the big issues was ACA state reporting. And those, like, for example, California has its own penalties on top of the federal penalties for noncompliance with employer reporting. So that is another complexity that came out in the last few years, and there may be more to come.
I think just related to that as well, I think something that shocked a lot of people was when the IRS announced that there was no statute of limitations on ACA reporting. Yeah, right. Yeah. So that was very surprising to many.
And what does that mean? That you are never safe. Your forms can always be subject to an IRS letter saying, hey, you owe us this amount in penalties. So it is a big deal. It means that you need to get all with respect to the reporting you've submitted, be confident with it and make sure you have documentation to back up your coding.
Well, you've done a great job of answering my questions, as well as kind of ending some of this, at least on a positive note, that the government or the IRS in any case is getting really efficient.
I'm not sure that would necessarily be good news to employers on this.
Now, I'm going to go from my questions to some audience questions, and you can drop any questions you have into the Q&A box there. Rhonda, did you have a poll we were going to pop up?
Absolutely. I'll launch that poll right now.
Now, one thing I didn't explain is why are John and Joanna so interested in ACA compliance? And it's because this is something that Trezag does, of course. So that's why they know so much. So this is kind of the business they're in. It's not just that they find it so fascinating, which I'm sure they do. So anyway, so feel free to just take a moment, and if something you want to get in touch with, just click the yes button, and then you'll be put in touch, because you can see this sort of an enormous amount of detail. Now, in the last, 10, 15 minutes, as I say, I'm going to go to some of these questions. And there's one here that really hits home with me based on my experience with HR leaders and their relationship with the senior leadership, because they're dealing with all these complicated compliance issues, as well as all the hiring issues and all the talent management issues they're doing as well. But particularly with compliance, the leaders feel I should be able to do this on my own. Okay, so that's what they're hearing from their leaders. You should be able to do this on your own. It's your job. So how do I convince them that I need help and I should consider outsourcing?
Well, I can answer that. Leadership loves business cases. So what you want to do is, figure out what the risk is, and then also, sort of the resources that are being spent to manage that risk. So among the sort of metrics you would present in your business case is what the risk of penalties are. Those are late filing, inaccurate filing penalties. Those are compliance penalties, including potentially the hammer penalty. Also, the amount of time that, the folks handling it, that translates into dollars too. If you expect someone who's capable of doing this kind of work, they have to be at a certain level to understand it or get up to speed. All that takes time. So, you put down in terms of how much would it cost for us to outsource? And then there's a dollar amount. And then what is the cost to not outsource? And it will be very clear that outsourcing to a reliable vendor is a better course if you look at it from a number standpoint. So, not like I'm really busy, can I get someone to help me? I mean, that's certainly an important point, but it isn't quite as persuasive as saying, well, we could be on the hook for, over $1 million in penalties. I will also spend, 80 hours a year for the year working on the reporting. I won't be able to do any of the monthly monitoring, or maybe I will, and then that will add a certain number of hours, and I could get the equivalent of that by outsourcing it, and it'll cost X dollars. It will be a very lopsided dollars equation. So that's, presenting the business case. I mean, HR, certainly in states like California, every year HR is expected to do more than the year before. And, it's not like, unless you're going to get another body, it's up to you to sort of, expand and rise to the occasion. It gets more and more challenging.
Yeah, I think that's perfect. And to, within the context of that risk benefit framework, just to, some of the details when facilitating those conversations, I think it comes back to educating the leaders as to, what kind of industry are we in? A lot of times they have no idea that some employers have the ACA a lot easier than others, right? So if I am an HR person in one of these industries that has, high preponderance of variable hour employees, part-time employees, I think you have to explain to the leadership, look, because of our unique workforce composition, we need to use the IRS look-back measurement method, which means that we need to, the accuracy of the hire and termination dates in our systems, which everyone knows is notoriously bad, is going to become a problem for us. We're going to need to track leave of absence, rule of parity. The affordability gets more complicated. So just educating those leaders as to, because of our unique workforce composition, we need to apply this more complex method. And just having the tools in place to be able to facilitate that conversation, I think can help a lot when engaging in those conversations with leaders, because a lot of times they may just not know or understand.
And another question which really follows very closely to this is that there are different types of outsourcing to brokers, outsourcing to accountants, getting payroll or compliance, ACA compliance experts. So it's basically the question is asking, what are the different types of outsourcing and what's the difference between them?
I can respond on that. I mean, I kind of alluded to it earlier. So let's just put them in sort of categories: brokers, payroll, vendors, CPAs. Those are probably the four main categories of folks that do ACA work. On the broker's side, their focus is going to be on the plan level that John was talking about. The administration, that's new for them. Brokers have historically been very good at coming up with ACA compliant plans. But for example, many brokers come to us to handle the administration portion because they don't have the expertise to do it, and it's time consuming, and they're all the issues that John talked about, figuring out the full timers, et cetera. That's not really their focus. Now they could expand and make that, they can become experts. So they're brokers, and they're also ACA specialists. But typically brokers don't have the capacity to do that. And so if it's a really simple situation, they can help. But in anything other than the super simple situation, they tend not to have the expertise. And again, as I was saying, if you're going to outsource, find out what services they're going to provide. Just because they are your broker doesn't mean they're going to handle your employer reporting for the ACA. With regard to the CPA, they're very good doing your taxes, but the ACA is new for them too. And so unless they have experience doing ACA reporting, it may not be a good idea to have someone with no expertise in it to handle it. But if a CPA does, get that expertise, there'd be no different than an ACA specialist. And perhaps a little bit more because CPAs may charge, sort of hourly rates, et cetera. If they have ACA reporting expertise, then CPA is a good avenue. But the question is, it's not a given that they do. Without wanting to toot our own horn, we are in fact ACA specialists. We know that stuff cold. So, we are like your one-stop outsourcing, and the scope of our agreements make very clear that we handle all the aspects of employer reporting. And so those are kind of the different buckets, the broker, the specialist, the CPA, and then of course in-house. And if you have the expertise and the time to do it, that's another, option.
Yeah.
Go ahead, John.
Just to add to that as well, I think that by far the largest category that employers use to effectuate the ACA, I think you showed it on your slide, was the payroll company. And so when you're using payroll, the value proposition that is communicated to the employer will often be, well, we already have your data, right? So the data resides in the payroll platform. It'll make it easier for ACA. But then what happens is, it's really the employer and the HR practitioner's job to go in and make sure that system is configured appropriately to drive the analytics each month, to identify data issues within the system. And so that can be, problematic for employers where they kind of forget, hey, I still have a lot of responsibility. Just because the data is in the payroll platform, right, doesn't mean that everything's going to be hunky-dory and good and very easy at the end of the year. In fact, it's quite the opposite.
Yeah, I didn't mean to interrupt. The payroll, their biggest piece is payroll, but that is not the be-all and end-all to getting ACA reporting. That's just a piece, a necessary piece, but it has to be reconciled with other pieces the payroll does not keep such good track of them. So if you're going down the payroll avenue, make sure you understand what they're going to do for you. Are they just going to give you the payroll data? That's not enough.
Right. And then I think on the other side, when you think about ACA compliance vendors, there's a lot of great vendors. There's a lot of great tools, technology, and skills and knowledge. But ideally for the employer, they shouldn't have to conform their data or wrestle their data into a format that is required by that vendor, right? So that's something else that I think creates a lot of complexity for employers, where they think to themselves, great, I've decided to outsource to this expert organization, but then they're running into data issues because it's still their responsibility to do a lot of data manipulations on an ongoing basis. And that can create, further data complexity that just compounds the other data issues that we already talked about earlier. So issues with hire and termination dates, employee classification, inconsistencies between silos, et cetera. So just things to think about. I will say that no single category has a monopoly on providing, amazing ACA service. There's lots of great vendors, but just food for thought as you're kind of going through that selection process.
Right, like how much effort do you have to put in on top of what the vendor is going to put in?
Right.
And I want to make sure we get to this specific question. There's lots of confusion about codes and how you find out about codes, but why don't we tackle this one that's created some anxiety. If you discover that your codes in a prior year were incorrectly reported, okay, so the code was incorrect, but you're confident the employee was in fact offered MEC. So it's just a simple error. Will the IRS penalize for a previous year code being wrong when they've been corrected in the current year?
Well, it's always kind of a precise question. If you discover that your codes are wrong under the IRS sort of rules, you're supposed to correct them. So will you be penalized? Not sure. And the reason why I say that is because, one, it'll depend, because if it's during the good faith years, it's less likely to be the case. And you would explain, we found this error, kind of establish sort of a factual basis as to why how you discovered the codes were wrong, and you corrected them, in a diligent fashion, kind of all the facts relating to that. And you may find that if it was in the good faith transition relief years, that's okay. Because basically what good faith transition means is you either filed it late, wrong, or inaccurate, or incomplete. But, there was sort of good faith effort on your part. And you're like, well, what's good faith, reasonable cause? I mean, good faith is a slightly lower standard. It's more subjective, and reasonable is more of an objective standard, which is a little harder to show. So it's, I can't give you a yes or no answer. It's going to depend on, sort of what the specific facts are. But you may find that those penalties will be waived depending on your factual situation. But as I said, the IRS expects you to correct your coding if you discover that it's erroneous. And unfortunately, what we have seen in the past is that employers have corrected it for whatever reason. And, the error system is not perfect. Sometimes what will happen is you'll get a new penalty letter based on this late filing, but really it was a corrected filing. And usually that can be remedied with a response basically saying, hey, I actually filed it on this other date. It was timely. Here's my receipt ID, etc. And that'll get you through that hurdle. Obviously, sort of establishing kind of your good reasons why you corrected it are going to be important.
And I think we better bring it to the end because HR.com will want this again. But let me just tell people something that we didn't show in the data, but came up in the research is both for Trusaics, when I looked at their own penalty data that they've worked with, as well as from the survey. People who appeal the penalty often find that they can get it reduced significantly. And Trusaic in particular has a good record there. So if you do get a penalty, don't just leave it, take some action and see what you can do on appeal. All right. Well, anyway, I'm so impressed with the depth of expertise we've had on this panel. So thank you so much, John and Joanna.
Thank you very much, David.
Yeah, thank you.
And I think Rhonda is going to take it away.
Thank you, David, and John and Joanna as well. Excellent presentation, very valuable. And to all of our members for joining us, we thank you as well. Your HRCI and your SHRM credit, those will be in your account within 2 business days. And then if you have happened to have come late, this has been recorded just now. It will be archived shortly on HR.com, so you can view it again at your own convenience or share it with a colleague. And then if you've watched this via live stream, we ask that you watch that archive in order to receive your credits. Also, for those in live attendance, you'll notice in the chat area, there is a link to an exit survey. Your feedback is very important to the folks at Trusaic. And so we just ask, and us at HR.com, so we ask that you just take a moment to fill that out. It will open in a new browser when I close out the session. All right. Thank you again to the folks at Trusaic and John, Joanna, and David. Thanks again. Take care, everyone.
Thank you.